The President of the United States last night addressed the nation in a long speech ahead of inflationary numbers. The president says that what you're going to see when the numbers come out today on Friday is not really reflective of reality. So that higher gas price that you're paying, it's not real. Don't worry about it. Your grocery bill, which is much higher than it used to be, that's not reality either. Your utility bills, not real. The president says...
What?
No,
Yeah.
it's not.
It's like David Copperfield came over to your house and he did some magic. So
Yes,
boom.
he's stealing from your wallet, but it's not actually a reality.
Yeah. So, yes, he's warning Americans that these inflation numbers are bad. And guess they must have known something. It's almost like the administration had a heads up that these numbers were going to be terrible. And guess what? We just got these inflationary numbers that just came out about 7 or 8 minutes ago, and they are terrible. Inflation surged 6.8% in November, even more than was expected. That's the fastest rate of inflation hike since 1982. That is a 40-year high. This is not good.
Did they by chance talk to Ron Paul? Is that how they figured it out? Or?
Yeah. Or anyone with a brain, right? We knew these numbers were accelerating at an unprecedented rate.
So let's just quickly go over what that number means. That means from this time last year, your goods and services are 6.8% more expensive. That's everything, right?
Which can translate that into that's because the dollar is so much percent less valuable.
That is one contributing factor, but there are many contributing factors to why each individual good will be higher. And of course, we see manufacturers arguing over like pieces of their supply chain puzzle that is forcing them to raise prices, right? Meat manufacturers are saying their feed is more expensive. Farmers, there was a story in the newsletter today, I hope you're subscribed, it's morninginvest.com, about how farmers are saying their fertilizer is at an all-time high, and it is not the normal course of supply and demand. And there are other economists, and this is something that I personally believe, that say that an influx in government spending does weaken the dollar and make it so that inflation is a result. And so when we take all of this government spending that they've been on in the last 2 years, specifically since the pandemic, to the point that we hit a debt ceiling and had to keep pushing it higher, then that has a result on consumer prices going up because of inflation. But the government is telling you it's really not that bad. Now, why would they be saying that? Because they don't want any responsibility for it. None, right? So ignore the fact that every time government spending goes out of control, there is inflation. Those two things are correlated. Economists say they are causal. Again, this is for you to interpret on your own, but the government doesn't want you thinking that way. Now, the president of the United States says, hey, it will get better if we pass my Build Back Better bill. So what he wants to do is put more money into the economy that's borrowed or made up from the government, put that, and then economists say that would make inflation worse. But he's saying, hey, pass my bill. It'll get better.
Yeah, this is not going to be a problem. And if we take a look at the overall numbers here, inflation, if we just put this in context, not to scare people, but inflation is still well below where we were in the 1970s, where it was in 18, 19%, upwards of 20% inflation. So just to provide some context here, this is not the worst that it's ever been. It's not even close to where it's ever been, especially after World War II, where it was at 20%, and then in the 1970s. So context is important. But when you are, we should point out, of course, is that inflation hits poor, middle class, I wouldn't say just average Americans. It hits them and hurts them more than anyone else.
Absolutely.
And so who benefits? Who benefits, right? Who benefits? All you need to do is follow the money. The Federal Reserve, guys, okay, this is where it's at for me. Forget Biden, because this was already happening before Biden was even president. The price of food was already up under President Trump. So you cannot blame President Biden for this. You cannot blame President Trump for this. Supply and demand, and you can, I think, squarely blame the Federal Reserve, which is, by the way, an unelected, fully autonomous monetary policy machine that has no authority, has no oversight, very, very little oversight from Congress. They are, I don't know, they work on behalf of Congress, but they don't even have to answer to Congress. And they've been keeping these interest rates artificially low for years, even providing rate cuts during the economy booming before the pandemic hit for no apparent reason whatsoever. And so these artificially low interest rates are the reason that these big businesses on Wall Street are seeing record profits.
But it's a vicious circle, right? So artificially low interest rates puts more money only by an accounting journal entry into the federal government, right? It's not as if they actually are printing money, although that happens, but they're also creating money through a balance sheet entry that gives the government more money. They can do that easier when rates are low. And that means they think they can then borrow more and flood the economy with more money. But it's not money going into the average person's pocket. It's more money in the economy in general. And then the average person suffers because the money they've got is now worth less, right? And so these are the results of government action. Now, whether you think that the government should have spent all this money before during the pandemic, whether you think that they should keep rates low is a completely different story. And we can debate that some other time, but we need to at least agree that government action is causing inflation. And that's something that the president doesn't want people to think. And in fact, if you look at what happened yesterday with the Build Back Better law, Congress decided to remove a tax on vaping products, which was expected to bring in $9 billion in revenue. Now, just this week, Elon Musk says you cannot spend $3 trillion more than you make every year. This is a recipe for bad stuff, right?
It's a loss every year.
The government, keeps saying we need more tax revenue, right? But then here's an easy gimme, like put some tax on vaping products, which, again, we can debate the merit of whether we should or shouldn't. But clearly lobbyists got involved in this and said, let's just take this out. We don't want this to hurt our business. Let's not do it. So there's $9 billion that they just said, we don't need that. It's okay. So why are we supposed to think Build Back Better will help when they're removing things that actually would bring revenue into the country and help?
Well, and let me ask a question too. It's because when in history have prices of gas fluctuates a lot, but when in history have groceries actually gone back down? He's saying that the Build Back Better will make the prices go down. When has that ever happened? Because the value of the dollar keeps going down too. So that would be impossible.
Yeah, I mean, how many of you see the price of your Triscuits or whatever it is you're buying go back down in price? Like going to buy a Happy Meal does not go back down in price. Like once a burrito at Chipotle hits $10, it doesn't go back to $7. They might run promotions from time to time, like buy 2 Whoppers for $2 or whatever it is, for $4 or whatever it is. But these numbers continue to go up, and the dollar continues to lose value. And so I think artificially low interest rates are crushing the United States. You think about the housing market right now. I mean, the housing market, over hot housing prices. Mm-hmm. How are these houses still selling? The average American can't even buy one, but the upper class can. And these prices continue to rise. These interest rates are artificially low. Imagine it would, by raising interest rates, by the Federal Reserve raising interest rates in commensurate with where this inflation is going. Here's the bottom line. Let me just say this. The Fed has 2 choices right now. They either can help, they can either try to go towards their goal of zero unemployment. That's their main goal, right? Zero unemployment, or reducing inflation. That's their 2 goals, right? They've said that. And so we have the choice. So we want to go after, so their goal is going to help Wall Street more than it will help Americans. Going for zero unemployment helps big business because Americans have already spoken and said, we don't want your crappy jobs. We're going to start our own business or we're retiring. We're done with this economy. We've removed ourselves from even looking for jobs right now. So we're not even in the labor participation rate anymore. And so you're going towards zero unemployment. And we've seen fantastic unemployment numbers. The unemployment numbers are great. So now the Fed, great, you've done your job. Great, you've made Wall Street happy. You've made big businesses happy with employment. Great. Now focus on inflation. Raise interest rates. Stop keeping these interest rates artificially low, which is only benefiting banks.
Now look, inflationary models are responding the way that economic models forecast, right? That these things happen when government takes these actions, right? And So now we see, like I mentioned earlier, the fertilizer companies are saying our prices for the farmers rather, our prices for fertilizer are not a natural result of supply and demand. The same thing can be said about oil prices. In fact, a watchdog group is reporting that these companies, big oil, have profited $174 billion in 2021 alone. So increased oil prices are high because they're high. It's not high because of the laws of supply and demand. It's not costing the oil companies more right now to get the oil or to deliver the oil or anything in their supply chain. They are just racking in profits.
Right.
It probably doesn't cost them anything because that's probably the stuff we subsidize.
Right. Good point.
Oil pipelines and other things like that. And yeah, I mean, we're giving, if you look at during what happened during the pandemic and the CARES Act, I mean, giving out billions of dollars, I mean, literally billions of dollars to coal companies, to gas companies, to oil companies, when average Americans, small businesses couldn't get any money and were being crushed and are out of business. But big oil profits up $174 billion in the past 9 months, as you guys have been paying way more for your gas prices and
now,
home heating oil as well.
Sam Dorchester in the chat says, but everyone wants a stimulus. Isn't that inflationary? Yes, but it's blood money. When the government gives it to you so that it can actually give itself more. So even though many people need it and they take it and they cash it, it has the result of making the things that they buy go up in price. So it's not $400 worth of stimulus. It's maybe worth in buying products now worth $200. Like the same things you could have bought for $400 last year. Now you're only going to get, well, let's say $350 worth of goods because now that money, it costs us.
But let's define stimulus though, because if
well,
we understand
stimulus that goes into the pockets of the American people, those bills specifically had all kinds of money for things not related to actual people.
Exactly.
If the government actually wanted to save small business or give people direct money, they would have done it in bills that had nothing to do with helping out their friends. That is not what happened.
Well, that's my point, right? So when Sam says that everyone wants a stimulus, I think what Sam may be getting at is that in its purest form, I want a stimulus. Like in its purest form, like to help
that's not
people.
what we're getting. We're getting stimulus that comes with the biggest. What's the
cronyism? I mean, look, when you have a bill,
it's got so many strings attached, and it's like
all kinds of money for oil companies, $25 million for the endowment for the arts. Like
it's like eating junk food when you're hungry. You're gonna just be hungrier because it's hurting you in the end, right?
Maybe what we all need to do
analysis
is we all need to start our own businesses and become little private banks and borrow at 0%.
You can do that. There's a what's that great book? Be Your Own Banker.
Yeah.
You can start your own. Let me look that up for you guys. The theory is, or the way that a lot of wealthy people do it, and in fact, that's the way Walt Disney started his production company, is you invest in a life insurance policy and you put money in your premiums, then go into a pool that you can borrow from. So then after 2 or 3 years, maybe you have a couple $1,000s and you borrow against that at your own interest rate in order to buy a car or in order to buy your house or whatever it is you're going to finance, so that you're not actually, you don't have to play the game of like borrowing from a bank. You are the banker. It's a little bit of an advanced move, but it's awesome.
If I overloan myself, would the government bail me out too then?
No.
Oh.
No. You have to, you have to use usury interest rates.
What if I become too big to fail?
I mean, then you'll be fine. Then you'll be taken care of, right? That's the great hypocrisy in all of this, right? Is that Natalie and I are both reading the book right now by Carol Roth, The War on Small Business, and what the pandemic did, what these lockdowns did to crush small businesses, and just this hypocrisy, right? Like, and so the problem is that if you're small, you just get treated small. Like if you wanted to go and get your PPP loan and you only had 2 employees, and you were forced to go to your local banks to get these PPP loans, they were going to put larger small businesses in the front of the line. Like if you went to Wells Fargo to get your PPP loan, they're going to say, oh, well, we're going to help the one that has 100 employees before you. You only have 2 employees? No, we're not going to deal with you. And so a lot of small business owners got screwed, didn't get access to this money that was then divvied up by these banks and apportioned by these banks. So, if you get bigger, great, then they'll take care of you.
Here, I'm going to quickly share the book because a couple of people.
And think about really quick. Think about what during 2008 or whatever when they had the derivatives. The derivative market made these companies bigger than they actually were, so they weren't like too big to fail. They had inflation or inflated growth or whatever that was not even real. It was fake stuff.
Yeah.
Yes.
Yeah, I mean, look, these big businesses, and again, the cycle all comes back to the Fed. Okay, so the Fed just makes all of this liquidity available for these big banks and Wall Street, and they're just flooding Wall Street with billions of dollars in money and liquidity, so that Wall Street buys up their own stocks, buys back their own stocks, artificially inflates their own profits, and takes on massive debt, while the American people get screwed. They're making profits fine on Wall Street. You're paying more for the stuff that they're making profits on. And so when President Biden, I just think the audacity of President Biden to come out and basically say, nothing to see here, don't worry about it. You don't have anything to worry about. Don't worry about this inflation. Everything's fine. It's total garbage.
Can you show your book now? Sorry, I didn't mean
That's
to
okay. No, it's called Becoming Your Own Banker by R. Nelson Nash, but there's another one that's a little bit easier, and I think, this one. No, that's not it. Not Finance Your Own Business. Give me a second to. Give me a second to find. I want to be helpful.
Okay.
Clayton's giving me crap about.
Dead air is great in a broadcast.
This is live searching of things, you guys.
Can we play some music? You guys want to play some hand puppets? I'll show you a video of Grover on the beach this morning. There he is.
Hey, if you want to learn to not need the big
Grover.
banks, this is not a bad thing.
That's good.
Okay, here we go. This one is easier to read. Live Your Life Insurance by Kim D.H. Butler.
Okay.
Okay, this is not a paid promotion, but it is a book that I learned a lot from. And if you are interested in lending to yourself rather than getting involved in these big banks and their dirty business, this is a great way to go about it. So we also have podcasts as well about this over on Morris Invest that you can look for.
And we should also mention, we do have a financial freedom boot camp that we built. It's totally free. It's 90-day financial freedom boot camp. What we want to do with this show is teach you about these corrupt government structures, okay, that are they're robbing you and they're enriching Wall Street and they're lining the pockets of big multinational companies. You need to take care of yourselves. You need to, empower yourselves financially. And one of the ways that we can do that, we built it's at 90-day. It's totally free. You can download it. It'll take you through week by week by week. Again, free, right there on your screen. morninginvest.com/bootcamp. Go there, download it, and hopefully it could really change your life, set you on the path to financial freedom and investing and all of that. So we built it and wrote it.